Today, Wall Street experienced the worst day since 2020. The post-election boom that the president, when he was president-elect, pointed to, well, that's been erased. Stock prices down, and Americans with portfolios, either for their retirement or for now, are facing genuine losses. And the unhappy reality:
the world is currently experiencing significant changes that could be referred to as a global reset. This is a time when the economy, financial systems, and political landscapes are being restructured in ways that will affect the entire globe. The shift began with a major move by the U.S. government, which has started implementing aggressive tariffs on imports from other countries. This decision is already creating ripple effects in the markets and in the everyday lives of people. What happened to trigger this reset?
Breaking news again today after Donald Trump's damage to the U.S. economy comes into fuller view. The markets today once again taking a nosedive. The Dow plunging 2,200 points, more than 5%. Even those good jobs numbers that were released this morning could not shake the market's pessimism as China retaliated against Donald Trump's tariff regime. The Chinese government imposed a 34% tax on all goods imported from the United States.
It all started when President Donald Trump, on a day now called Liberation Day, announced a set of tariffs on imports from various nations. The U.S. imposed a 10% tariff on all imports, including goods from China, Vietnam, and the European Union, with some countries facing tariffs as high as 34% or even more. The idea behind this is to bring manufacturing back to the U.S., protect American industries, and ensure the country's dominance in the global economy. Supporters of these tariffs argue that this is a necessary step to protect national security and rebuild American industries. On the other hand, critics warn that this policy will raise prices for American consumers and lead to a potential economic slowdown. The immediate result of these tariffs was a sharp drop in the stock market.
This is not that. In fact, you did not get any of that late day buying, people trying to find a bargain. They don't think there are any bargains here, at least right now. 1,700 points almost on the Dow Industrials, almost 5% on the S&P 500. Those are big one-day moves. In fact, when you look at the move in this market today, we haven't seen a day like this in the S&P and the NASDAQ since March, early 2020. Remember what was happening then? That was COVID, when the entire global economy was shutting down.
Major stock indexes like the NASDAQ and small-cap stocks were hit hard. By the time the tariffs were announced, the stock market was already down by about 10% from its peak, signaling a market correction. This sudden change has created a lot of uncertainty and fear in the financial world. As stocks fell, the value of currencies in export-driven countries like the Mexican peso and the Chinese yuan also weakened. This shows that the effects of these policies are not limited to the U.S., they are being felt worldwide. For the average American, the tariffs will mean paying more for goods. Estimates suggest that the average family could pay over $5,000 more due to higher import costs. Businesses are scrambling to deal with the impact of these tariffs. Some are seeking exemptions or hoping that the policy will be reversed. As these changes continue to unfold, no one knows how it will all play out. But why did the U.S. decide to impose such high tariffs? The administration's reasoning is that they are trying to level the playing field. They claim that the tariffs are reciprocal, meaning that the U.S. is only charging countries the same amount they charge American goods. However, the reality is different.
Spain is very low. And yet, are they a BRICS nation?
What?
They're a BRICS nation, Spain. You know what a BRICS nation is? Well, you'll figure it out. But, and if the BRICS nations want to do that, that's okay, but we're going to put at least a 100% tariff on the business they do with the United States. You know what the BRICS is, right? You guys know.
Brazil,
you know
Russia.
what I'm saying, right? You know what I'm
For example, China's average tariff on U.S. goods is around 6 to 10%, but the U.S. is charging China a 34% tariff. This disparity exists with other countries as well, making the tariffs much higher than what the U.S. is receiving from these nations. So, the U.S. is not just matching the tariffs, but is imposing them at a much higher rate. The tariffs were calculated based on the U.S.'s trade deficit with each country. For example, the U.S. has a trade deficit with China of $295 billion. And based on this deficit, a 34% tariff was applied to Chinese imports. The process used to determine these tariffs ignored the value of services in the trade equation, which is an area where the U.S. actually has a surplus. This means that the tariffs are not entirely based on an accurate reflection of the global trading system. So, what does all this mean for the future? Most people fall into one of two camps: those who believe that the U.S. is making a huge mistake with these tariffs, and those who think there might be a bigger strategy at play. One theory is that these tariffs are not just about trade, but are part of a broader economic plan to deal with the U.S.'s growing national debt. High interest rates, which have risen in response to inflation from the pandemic, have made it more expensive for the government to pay off its debt. This is where the idea of using tariffs to slow down the economy comes in. If the economy slows enough, the Federal Reserve could be forced to lower interest rates to stimulate growth. Lower interest rates would make it cheaper for the government to refinance its debt and potentially allow the U.S. to address its financial challenges. This theory is not without support. Some of the world's leading economic thinkers, like Ray Dalio, founder of Bridgewater Associates, have pointed out that tariffs can be deflationary for the countries that face them, but inflationary for the country imposing them. In the U.S.'s case, this could lead to a situation where the Federal Reserve steps in to lower interest rates. Lower interest rates would make it easier for the U.S. to refinance its debt, which is rapidly approaching $9 trillion. In the long term, this could benefit the U.S. by reducing its reliance on foreign production, rebuilding domestic industries, and fixing trade imbalances.
Donald Trump doesn't like that one bit. Listen to what he said on social media, and I'm quoting, "We require a commitment from these countries that they will neither create a new BRICS currency nor back any other currency to replace the mighty US dollar, or they will face 100% tariffs and should expect to say goodbye to selling into the wonderful US economy. They can find another sucker."
President-elect Trump is vowing to impose 100% tariffs on BRICS nations unless they commit to not developing a new currency. Trump made the declaration in a Truth Social post Saturday, saying, quote, "There is no chance that the BRICS will replace the U.S. dollar in international trade, and any country that tries should wave goodbye to America."
Let's get started as far as this warning that is now concerned coming in from Donald Trump to the BRICS nation, demanding that they abandon plans for a new currency. He's threatened 100% tariffs and exclusion from the U.S. market, asserting that the U.S. dollar remains irreplaceable when it comes to global trade.
If you want to stay informed on how these global shifts might affect your investments, finances, or the broader economy, be sure to subscribe to our channel and hit the notification bell so you don't miss out on future updates.